How's it going, fellow traders? How's it going? Hope you're all doing well this afternoon. It's a beautiful, what do you got? Wednesday afternoon? Yep. Wednesday afternoon around 4 p.m. Just wanted to check in with you guys and talk about what we are seeing in terms of gold, because we're seeing some big stuff. This latest set of data that came out recently, I think was substantial. Okay? It was very substantial from what I'm seeing. And so I wanted to just point a few things out that I'm seeing, and then get your take on it too. Okay, get some feedback from you and see what you're seeing. We'll look at the data released by the banks. We'll look at the supply and demand dynamics of what we're also seeing on the charts, and then we'll see what's going on from there. Okay, so hope you guys can hear me okay. Can you guys hear me okay? So yeah, let's get started. Let's take a look and see what we've got going on here. All right, we got the chart of gold. All right, as you can see, and the first thing that I will point out to you is if you look at the monthly chart, we have a very important area of demand that's in play right now. Okay. This demand zone has been there for quite some time, right? We were expecting a drop into it, and that is what took place. Price dropped into that area of demand, and price has been sitting inside that demand ever since. Now, why is this important? It's important because when we look at the other markets, we are trying to determine whether or not the institutions are going to use this area of demand to continue pushing price higher, or if they are going to remove this area of demand, which for a move even lower. Okay, so so remember this demand zone here on this monthly chart, because now I'm going to flip over to the DXY, right, and we're going to take a look at its dynamic. If we look at the monthly chart of the dollar, we see that we are inside an area of supply. Okay, this area of supply corresponds with that area of demand that I just showed you on gold. Right? These two things are very important, right? Because whether gold drops hard or the dollar rallies hard, all come down to these two areas of supply and demand. These two areas are the supply and demand created by the banks. And when you examine the charts, there's nothing to stop price from moving once those zones get taken out, right? So in other words, once those zones get taken out, nothing will stop price from continuing in that direction. Okay, so this supply gets taken out, there's nothing to stop price from continuing higher on the dollar. Okay, now if I go over to the euro, we have a very similar situation. But with respect to the euro, it's not demand, it's not supply, it's demand right here. Okay, that is the key area that we are watching. Now, this past week we had something take place on the weekly chart. Okay, on the weekly chart we had this area of demand. Again, this is created by the banks right here. Now, this area of demand is located inside that larger area of demand that we have on the monthly chart. Okay, so this area of demand got removed. Okay, and this opens up the floodgates for a move lower. But what is taking place here with price action is not reminiscent of what we would typically see when price wants to drop even lower. Okay, so keep this all in mind. I'm explaining all this in detail because we're getting to something. All right, we're getting to something important. All right, so we have that taking place, and let me just show you something here. Let's clear these drawings. So what's happening right now is not reminiscent of what would typically take place if price were to drop. Okay, now let's go back to gold. Remember what I was talking about with respect to what price is doing with gold. Okay, it's holding that massive area of demand on the monthly chart, and it's also staying sideways here on this weekly chart. Okay, as you can see, for many weeks now, and this is going back from, April 2020, This is where this range began, all right? And it's been stuck here ever since. Why is it doing this for so long? Well, it's because the higher time frames are what's playing out right now, okay? It's the higher time frames that are playing out, and that's why it's causing price to just stay in a range for a long time, all right? We got things happening on higher time frames, higher than monthly chart. Now let's open up and take a look at the data from the banks, okay? What do we see here? Now, if the banks were about to take out their own demand and cause price to drop, what we would begin to see in terms of the data, okay, when we're looking at the positions of the banks, what we would start seeing is a reduction in long positions and an increase in short positions, okay? Now, what we had the other day, back on June 29th, was contracts expiring. Now, typically what happens when contracts expire, they are times where the institutions will make some kind of a shift, okay? A dramatic shift in their positions. So, in other words, if they had plans to drop price down, what they would tend to do after contracts being expired is they would start to close out their long positions and start adding to their short positions. So let's take a look at what the banks were doing since that day. So since that day, the institutions had about 91,000 positions, contracts, short, okay, 91,000 times whatever it is. And it went down to 87, 84, 81, 74, okay? So over the next few weeks, all they did was drop their short positions. Now, let's look at longs during that same period. They went from 254, 270, 75, 77, and up to 273. So during that period of time, they were increasing their longs and decreasing their shorts. Now, that's July 27, all right? Now, if we go to the map, we go to the chart and look at July 27, we will find July 27 is this right here. Now, what happened there? Do you remember what happened there? Okay. There was a big drop in gold. And remember what they did with that drop? We've spoken about it on the Telegram channel. And members know because I posted this in the EURUSD report. They lured retail traders into going short. Okay. That's what happened. With this significant drop, they lured retail traders into going short. We know that because we checked the positions by the retail traders, and that's exactly what took place. So now let's go back and take a look. What happened after that period? We have 273, 277, 284 for 3 weeks straight. The banks have been adding to their longs, all right? Whereas on the short side, you can see a big increase in shorts. That's what really drove price down. Okay, that's what lured retail traders into going short. And then immediately they closed them off. All right, closing a massive amount of short positions like that would cause price to rally. All right, so think about it. Think about it. What I've just broken down to you is when we examined the Euro US dollar chart, we saw a small amount of evidence with that weekly area of demand being removed that price could potentially drop. But then after examining how they were dropping price through this area of demand, it wasn't reminiscent of what would typically take place if the banks were about to push price even lower. So that leads us to suspect that price isn't going to go lower. At the same time, a massive area of demand, institutional demand, okay, this is demand created by the banks, is still holding. Now we come over to gold, and what do we see? Price declined. Why? Because the banks were adding to the short positions, okay, causing a massive spike and causing retail traders to get suckered into going short. The moment they got in short, the banks closed their short positions, reducing them from 108,000 to 92,000, causing an immediate reversal to the upside in price, adding long positions from 277,000 to 284,000, and immediately drove price higher. Okay. Now, is all this telling us that price is going to go lower? I mean, eventually it could. It's not likely from what we're seeing. Okay, it's not likely from what we're seeing. But all the evidence suggests that they are not preparing to push price lower. Okay, it's been holding quite well. This area has been holding quite well. And if it wants to start rallying up, now would be the time that it would do so. Okay. And again, if we look at the euro, what is taking place on the euro chart, is what we're seeing is very reminiscent of something that could start doing this. Okay. We have some obstacles, to get through for price to be able to rally up there like that. But it's very possible that that can happen, okay? And another thing is that if we look at the positions held by retail traders, they are mostly short the euro, okay? Mostly short the euro. So if they're mostly short the euro, very good chance that we see price rally up, okay? Now, with respect to gold, they were about 50-50, but recently they've been adding a little bit more to their long positions. Okay, so that's something to take note of too. But again, we're not seeing proof that price is indeed going to continue dropping. Now, remember what I was talking about. Okay, because we're not seeing any proof in the euro, it leads us to suspect that since there's nothing to show us that price is going to drop, it is likely going to rally. And there are many times in the markets where we know exactly what price is going to do because of the buildup, okay? Because of the sequences that play out in the market. But this is a situation that's very, it's unique in that it cannot rely on specific supply and demand dynamics to determine where price is going to go, okay? Because like I said, since June, all right, of 2020, when price started this range, price has done nothing but just stick in this range, all right? And it either needs to remove this area of supply or remove this area of demand down here on the monthly chart. That's basically the two roadblocks that we have keeping price in this range, all right? But because of what we're seeing with the CFTC report, okay, the manipulation that has been taking place with the positions, it leads us to suspect that in this very uncertain chart dynamic, it is highly likely we're going to see price start building to the upside. Okay, and so let me show you one really important chart here. Okay, this is an important chart here. Okay, this is the daily chart. And why is it an important chart? Okay, so putting things into context, we just spoke about how recently the banks pushed price down quite dramatically. All right, and with this big push down, they lured retail traders into going short. And then what happened after that? Immediately they pushed price up. Okay? We're not seeing any signs that they're going to continue to push price lower. We're seeing similar signs on the euro where there's a lack of evidence suggesting that price is going to go lower. All indications are pointing that price is going to continue higher. But now we've got this area to contend with. Okay. Right now, the institutions have built a downtrend, okay, on the chart, on this daily chart, okay? This is the daily chart of gold. And the institutions created a downtrend to help facilitate luring retail traders into going short. Now, if the reason why the banks created a downtrend was only to facilitate luring retail traders into going short, then we can safely assume or expect that this downtrend is not going to be used to facilitate a move lower in price. Okay? Now, how would we know that? Well, price right now is contacting an area of supply created by the banks. Okay, so not only did the banks create this downward trend, but they also created this area of supply, meaning this is where the banks were putting in short positions. Okay, putting in short positions. So if price comes back up to this area of supply, it's either they're going to continue filling in those short positions to cause price to go down, or they're going to remove this area, which is going to open up the floodgates for price to rally. And if that happens, if this area of supply gets taken out, lo and behold, we can expect more upside on the weekly chart. Potentially a drive up to head towards the 1911s. Okay, that is what we're seeing. So I want you to be aware of that, because right now a lot of retail traders are in short, some are in long. I could tell you right now, the vast majority that were trading gold got in short down here at the lows. Okay, and they lost money. When the institutions reversed price and started pushing price up, they lost money. I could guarantee you that. All right. So be careful. Knowing when to get into a trade is extremely important. But if you don't know what to look for and the reasons why you're looking for those things, then you're not going to go very far in trading. So I just laid it out for you. Okay. I laid out for you all the evidence. I laid out to you exactly what they were doing with their positions and why they dropped price and what formation they created on the daily chart. So now I want you to take that, think about it, and watch as price plays out. Okay? If that area of supply holds on the daily chart, watch to see what happens. If it gets removed, I want you to watch to see what happens. Okay? So, that's it. Hit the like button for me. I would appreciate it. There's a couple comments I'll read. Is this gold live stream every day or every week at 4? No, this is just a special live stream that I wanted to share with you because I was examining the data, looking at the charts, and I was putting all these pieces of the puzzle together, and I wanted to share it with you because so many of you always ask me, what is it that you guys are doing? What makes your analysis so unique? How is it that you're so accurate with your analysis? What is it that you're seeing? And the only way to really show you or explain to you what it is we're doing is to show you. So this is just a small snippet of the analysis that I've done in order to determine what is likely going to happen with gold. And so I wanted to share that with you guys. Okay. Every morning is there a live stream too, right? I try to do a live stream in the morning, 9 a.m. I'm probably going to be changing that time to about 10 a.m. Still working on that because we're doing a lot of classes with the students, and 10 a.m. Was what time I changed the classes to be, but it's not working for a lot of students, so I've been changing those to 9 a.m., which means I got to find another time for the live session. So probably 10 a.m. or 10:30 or something like that. But I'll be looking for something a little bit more permanent. Plus, it's the summer. My schedule has been crazy, so I haven't been able to do live sessions with you guys every single morning and do all the sessions with the members of the school at the same time. Okay. Let's see. Retail traders were massively long. I think it was even more taking them out and in meantime inducing shorts. Yeah. Inducing shorts and taking out longs. That's true. Yeah. High chances price to go up again. 1810. Yeah, very good chances. Next targets. Yeah, because the recent drop happened because of manipulation. Yeah, exactly. That's pretty much the point that I was making. Okay. All right, guys. So if you appreciate the session today, hit the like button. I would appreciate that. And that's it. I am the order flow trader, smart money holder. Their positions 1800 level. So it's definitely going test again 1810 level. Well, thank you for sharing that. I appreciate it. Okay. So that is about it, my friends. Thank you for joining me today. I hope you enjoyed it. And take care. If you have any questions, reach out to me. And if you're not in the Telegram channel, you got to get inside the Telegram channel. All right. Links are on the website, www.whiteoakfx.com. Thanks. Enjoy. Take care.